Hey everybody, welcome to Options with Hans. I am Hans Albrecht. I was a pro options market maker for 15 years and an options income fund manager for a decade after that. $1 billion managed. Disclaimer, as always, this is for educational purposes only. Your trade, your responsibility. And if you're okay with that, let's dig right in. Please like and subscribe. Grab my free ebooks down in the description. These are those real actionable blueprints that give you pro insight from a pro on how to do this stuff, giveaways that don't suck, in other words. But they really start from the very, very beginning. One of them deals with a boot camp, so don't be intimidated. If you are interested at all in options and learning about this stuff, it starts from square one. I teach everything from the absolute start all the way up to super expert hedge fund manager. So when you jump on board and grab those, I'm going to also get you on the wait list for when my crypto income opens up, which is going to be tonight. It's going to be awesome. We are going to talk about in this program how we find edge when trading options on crypto, how to find more sensible, lower risk ways to add crypto exposure with hedging, with limited downside, with income at times when it makes sense, only when it makes sense. So for example, we talked about this in an earlier video, our income trades have us up more money than if we had only owned Bitcoin. That is a very unusual result on a very big upward move. And that comes from having managed hundreds of millions of dollars in income funds and knowing when to zig and when to zag. Now, I can't guarantee that is going to happen on every single trade, but that is the goal, to create exposure with less volatility, less risk, some added income, and other upside trades, turbo trades when it really makes sense, right? When our indicators are telling us to get strategically aggressive and greedy, we are going to do exactly that. So we're going to have an intro rate of $5.99 a year to follow along with me, a whole bunch of bonuses, my free options bootcamp course, my Edge Finder guide, live sessions throughout the year, newsletters, updates, and of course, real-time alerts on all of my ideas before I do them. We're going to send those by email, send those by Discord notification. That is what a lot of people want. So don't worry about it. Those are going to be in the program as well. So speaking of making the right decisions, which I hope you do, we nailed this one in Leaps Trader, and I still love this name. I'm going to show you exactly what we did, why it still could be one of the biggest winners going forward in that AI inference phase. Now, what I want you to realize is something very, very important, and I've been screaming about this AI inference phase, right? People are stuck in the past. This is a natural thing that human beings do. And in investing, it's a very, very important thing. I'm going to tell you some interesting nuance here. People are stuck in the training phase. They think it's still about NVIDIA selling a whole bunch of GPUs and AI agents basically being stuffed with all kinds of data to learn to potentially do something at some point. This is the new stage. This is where it actually starts to happen. And analysts and investors alike often project growth rates forward based on pretty much what they see now, right? It is a forward growth rate, but it's very much based on existing growth rates, past growth rates. It is very kind of linear in the way that they have their thinking, right? They miss these important inflection points. We are in the very early innings of AI inference, maybe the first half of the first inning. And what inference is it's utility proven, adoption surging kind of phase to AI, where it starts to spread throughout everything we do, every company potentially, every industry, every sector throughout the world, right? Throughout the world. Everyone's going to have to get on board. It's kind of like if you saw electricity for the first time and you went, you know what, maybe we'll pass on that. Yeah, we're not going to go for that. We'll just, we'll wait and see how it works out for other people. No. You need to get on board. This is running water. This is the printing press. This is have to get involved at almost any cost. And that's why you're even seeing companies get rid of people in order to find the budgets to get involved in AI. That's what makes this such an incredibly powerful thing. And it is only going to get bigger. So we're going to need all those components, all those things. We're going to talk about that company today, Nebius, that is very, very much involved in this build out of what we're talking about right now. Okay, so not to belabor the point too much, but think of training. I've got some notes on the screen here. Training is a one-off. You're jamming all that data into these AI agents. You're preparing them for the stage that is now happening, right? So it has a cost to it. It's very cost intensive. It's compute intensive. Inference, though, happens every single time the model is used now. This is how it spreads and gets used, and the utility part of it happens for every chatbot reply, for image generation, for video analysis, fraud checking, recommendations, etc. All the stuff that we do, all the things that are going to be created over the next 10 years, all these things that use AI to generate some sort of value, that is gears constantly turning, and that's massive amounts of power, up to 100 times the power that we are using now for AI. 25, 30, 35 times the compute that is required. That's why NVIDIA is strong, things like that. It's just going to continue and continue. And the inference workloads, again, remember, in this world, things are not linear. Inference workloads are just not going to just scale linearly. They're going to compound more users, more use cases, permanently rising demand. It's piles upon piles upon piles of compute data, etc. So it is very, very real. There's no stopping it. And of course, we are investors and we're traders and we want to know how this plays into markets. This does not mean that stocks are only going to go up, but it does mean that this is one of the greatest stories and narratives that we've seen in 100 years. So that's how you should sort of be looking at things in the back of your mind. It doesn't mean we're not going to have 50% sell-offs in some stocks at times, because this is going to involve crazy, crazy exuberance, and it's going to involve equally nasty sell-offs here and there. But in the back of your mind has to be this story that is strong for certain things and going to be very disruptive in other things. So, I'm doing a lot of work looking at Salesforce and things like that. These guys, there are companies out there, software as a service companies. Look at this MCP coming in here. There's the ability for AI basically just to listen to you and for you to be able to say, hey, listen, build me a piece of software, do this, do that. We are going to all have that ability. There are tens of thousands of companies out there, Jordi Visser talks about this, that have been built upon this idea that they can be the middleman connecting data and people and consumers, and that they are not going to be necessary anymore. Now, I think we're going to be able to sort of overstep how easy this is going to be. You still have to figure this out. You're not going to replace Salesforce just because you have some sort of idea of how to use GPT. This is going to take some time, but it is going to happen. Okay, so next, edge inference is the tsunami, because a lot of inference happens in data centers, and that is going to be big enough. A lot of it eventually is going to move to smartphones, IoT, which is Internet of Things, basically devices, sensors, everything around you, glasses, wearables, everything in your home, that kind of stuff. And then also into industrial enterprise IoT type sensors in factories and things like that. So this is going to trigger an amazing hardware refresh cycle. Then storage bandwidth overhang. So massive new data. This is one of my big things, is we are just going to create data like we've never created before. So, and then telemetry and sort of, figuring things out, fine tuning, all this stuff, all these companies that are going to, go overboard and do everything that needs to be done. And that's just going to create more and more data. So hard drives, things, Western Digital, I'm going to do a video on that. And so the amazing thing is, this is so exciting for markets, for companies, because it is monetization. That monetization ability becomes more predictable, right? Training spending is very lumpy. It doesn't see big reward, right? Remember in March, April, we're like, well, is this going to pay? Is all this money being spent going to pay off at some point? This is where it does pay off, because inference spending is recurring. It's like a utility bill. It just keeps going on and on and on if you want to keep up with everyone else. And so it's less cyclical and very, very investable. So very, very strong stage that we're going into. You really have to keep that in the back of your mind. If you are not thinking along these lines, you are really, really missing this. And I think that is a natural thing for people right now. They don't see this is. Now, how are we going to play this? Well, in Leaps Trader, so we got in, added the Nebius call. So Nebius is that amazing data center company, but smart data centers, right? So think of the traditional data center. So Nebius is positioned. It's a European based company, sort of old history in Yandex, which was sort of a big tech company based in Russia, but completely separated out of that, right? So one of my points was I think it gets kind of associated with that, but unfairly, right? So that was part of the reason it was a little bit under the radar. We got into this trade 1930. Around $38. The stock traded at $70. So these things are up a whole bunch. I'll show you in a moment. Nebius is a data center company, kind of GPU compute, right? So a lot of the companies out there, Equinix, things like that, are basically very kind of old school data. And these are going to be important as well. There's no question about it. They're going to be important. And they're also, right? You take an Amazon Web Services, that is making more and more moves towards being more AI, whereas it's just a little bit more like your standard kind of storage, basic compute, not as much of that higher end GPU type inference compute type data center. So that's what Nebius does. This is where people are going to be able to sort of rent a GPU. Think of it as you need it. And as the world expands and undoubtedly needs this stuff and needs to do this stuff, they're going to look to companies like this in order to get things done. And I said, listen, this may be the better value play. Same thing, slightly different region, 1/5 of the valuation in an area that is underrepresented. That's what I said. And in this time, we've seen Nebius basically go up 70, 75%, and Coreweave has really gone nowhere, although it's bounced just a little bit in the last couple of days. But we'll see if that continues. So these guys are just positioned for that acceleration that we're talking about, non-linear, explosive type acceleration. 106% quarter over quarter. Their numbers were really, really good the other day. And again, go back to my very first points about you can extrapolate and kind of go, okay, well, here's the trajectory. The trajectory is probably a lot steeper than people think. A lot of good relationships. Shopify, Cloudflare, working with very important companies. ClickHouse owns a good percentage of ClickHouse, which is they have started to get a nice portfolio of holdings that are also going to do well in this mania. 1.68 billion in cash, minimal debt. I mean, these very different compared to Coreweave. Different sort of bigger, I'd say sort of a bigger hyperscaler sort of focus. Definitely has that NVDA connection, although Nebius does as well, but much stronger connection on the Coreweave side of things, relies more on financing. So very, very nice, rosy outlook for this company. There's no question. This is more, this is more spec than owning like an Apple or a Microsoft or something like that. But this is where you're going to see, remember the picks and shovels. I don't know who's necessarily going to win. Maybe Salesforce disappears at some point. Maybe some other company becomes the new Salesforce. Maybe somebody figures out how to do things better. We know that that's going to happen by the tens of thousands of cases over the next 5 or 10 years. We're going to see just great companies come out of nowhere. But I do know that the people selling the picks and shovels to the people panning for gold are going to make a lot of money. The chips, the data center needs, those compute needs that people are going to have on their way to trying to become a big success, that it's just going to happen, right? They need to have electricity if they want to run their machines. And this is one of the companies that is going to provide that. So let's take a look at a couple trades. Okay, so remember in Leaps Trader, we've got the 3 portfolios: Leaps Core, Leaps AI, and then Leaps Explosion for those really explosive trade potential type trades. Amazing trades that we've had on things like Nebius, Goldman Sachs, NVIDIA, et cetera, SOXL. So here you can see in our core, we've got these are up 136%. In our AI, we're up 31.9%. And then this one we only put on a week ago, and that's up 50.96%. That's in our new portfolio. So we got a lot of new members, and they said, hey, listen, we can't get into some of these older ones. I said, this looks still really fantastic. So great stuff there. But I don't think this is over. I would like to see maybe just a little bit of a pullback. What you notice here is that because it's a hedge Leaps Trader, we've got positions. We don't do a ton of these particular things, but we had an income trade that generated about what was it, 5%, almost 5% that we covered for maximum win. on those. And then just last week, I picked up some downside put spreads. So, I'm not afraid to kind of add a little protection there. We've had a little bit of a nice run up there. I don't do that often. I have positions that are up 150% where I'm not adding hedges, but I do teach you that stuff. So anyway, that's how it looks. That's how the portfolios look. So in terms of options, I would be looking at a September 2026, right? I want to give myself some time. This has had a nice little run up. I think it could probably pull back into the high 50s, maybe low 60s. So I wouldn't be super rushing into something like this, although I do think it's an amazing, this is a stock that, what I like about stocks like this that are under the radar is that they don't have the following yet, right? Goldman came out with it. At the time I said, listen, this is really big. Goldman just came out with an initiation on this stock. That's very big. That shows you that it's starting to get onto the radar of some important brokerages. And what that means is, as you start to see people get on board, you're going to see more analysts upgrade and initiate coverage. That means this name ends up on advisors' desks, right? RIAs, they're going to start saying, hey, listen, I got this great stock. Half these guys just kind of look at the research that they're given. They say, I've got this great stock. So like lemmings, the analysts get on board, the clients start buying, it does well, they buy more. It starts this sort of virtuous cycle that tends to push stocks up over time when you have something going from, relative anonymity all the way to the point where, enough people are now covering it and there's a certain level of excitement. This is nowhere near that level. So I think you could easily pick up an 85. You want to be a little bit more conservative. This is going to give you a very long time for this trade to kind of, sort of simmer and sort itself out. Remember, what I like about long-term calls is they give you the chance to be wrong before you're right, which is a very nice thing. So you can pick up some of these for about probably, stick a bid in there, maybe 1075. That's what I'm going to do on Monday. Not financial advice, but I'm going to stick in a bid around 1075, try to pick up some of these, and hopefully this thing pulls back a little bit. I get filled on that, and I think you could probably, fairly easily, I think as we melt up in the fall, I think you could quite easily make 50 to 100% on your money in a trade like that. So hopefully you guys enjoyed that, and we'll see you in the next video. Don't forget about Leaps Trader, which is of course on sale now. Then we've got a certain number of spots being released for crypto income, which I'm going to do a video on. It's been doing great. We've been adding to Ethereum positions, which are already up really big. And so these are the kinds of things we do. I'm not yet doing any income on those particular trades because that's not how I do it, right? The poor man's covered call is going to keep you poor if you do it the way that everybody on X says to do it. So there's a way to do things and a way to not do things. Make sure you're on the right side of that. So let's take a look. We also got Turbo Trader coming up pretty soon as well, which are going to be pro trades that really take advantage of certain amazing things. And I can probably put a big package together of all those things for those who are interested, who really want just kind of an approach to basically all the best ways to use options. Okay, so we'll see you in the next vid.